Jerome Powell's Jackson Hole speech on Friday lit the market on fire again. Since then, Bitcoin ripped off 5% off the lows, while Ethereum smashed through new all-time highs with the 15% surge. But here's the question: is this just the start of a massive run or the calm before the storm? In this video, I'll break it down with the precision of an elite trader. Stay locked in till the end because you don't want to miss this. What's up guys, JC here. So first off, let's talk about Friday's hot topic, Powell's speech at Jackson Hole. So against what most were expecting, Powell came out dovish. And with rate cut hopes flaring back up, the market mood flipped from downbeat to ripping higher. Now, the real question: how do top traders respond to the shift with the cold, calculated perspective? And that's exactly what I'm breaking down today. But before we dive in, if you haven't hit the like and subscribe yet, do it now, seriously. It'll come back to you in the most positive way in your trading journey. Alright, let's start by recapping the key points from my last video. Holding a long position with an average entry of 113.6k, the flow of spot ETFs wasn't looking good at all. And also the chart was printing lower highs with lower lows, so it wouldn't have been surprising if it dumped right there. On top of that, the 3-day 20 period moving average, which hadn't been broken since April, finally closed downside. However, I said I wouldn't be shorting. Instead, I chose to secure profits earlier as part of risk management. And I made it clear that I would quickly take profit if price reached the 3-hour 20 period moving average, and then look for the next entry. Yep, and that's exactly what happened. Price bounced right up to 114.7k and then dropped all the way down near 111k. And yeah, I posted the exit update on my YouTube community at the time. Yeah, of course, after that drop to 111, we saw a big rally on Friday. But still, I don't have any regrets about locking in profits early, and the reasons are simple. First, I traded based on my own clear standards and judgment. And second, I didn't lose any money on this trade. In fact, I still walked away with profit. And third, when Friday's sharp rally hit, I was watching from the sidelines without a position, and that meant I didn't get caught chasing at 117 out of some weak-ass FOMO. Now let's break down the current situation with a clear perspective. So looking at the Bitcoin chart, after the PPI release, price dumped and then went sideways for a bit. And as rate cut expectations faded, another drop followed. But then Powell's speech at Jackson Hole sparked a bounce back into that 117k area. But considering that the PPI driven sell-off started near 120k, it's hard to say that this bounce has fully recovered the move. And over the weekend, there's minor pullback, so it's natural to wonder if Friday's rally was just a dead cat bounce. But let me give you the conclusion up front. I believe that this resistance zone will be broken through. Still, that doesn't mean the price takes off right at this moment. There are some levels I'm waiting on, so make sure you watch this video all the way through. There are two strong arguments for expecting upside here. First, let's talk about the psychology of the market makers. On the 1-hour Bitcoin chart, you can clearly see that the 117k zone has acted multiple times as both resistance and support. So support, support, resistance, resistance, which means this is a key supply and demand level. And whenever price hits such an obvious resistance area, many traders jump into shorts. And at the same time, trapped longs look to exit at their break-even. And both the short entries and break-even exits add to selling pressure, which explains this minor pullback we're seeing right now. But here's the thing. If price were to dump hard again from here, it would be handing easy profits to obvious short entries and letting trapped retail traders escape at the good prices. That would make the market makers look like angels. And I'm sure I know better than that. These market makers are ruthless. The odds of them being nice guys here are low. If they were truly about to flip into a downtrend, they would not give everyone such an obvious long entry. Instead, the more likely scenario is what I've said many times, is either fall short or go further. And that is why I believe that this supply zone is being used intentionally to make retail believe that this is a strong resistance zone. Price will almost certainly be lifted back into that 117K zone, and in the process, market makers might go further, squeezing shorts to push up to that 120K area. And the second reason for leaning bullish comes from the ETH chart actually. So on the left we have Bitcoin and on the right Ethereum. And looking at the Bitcoin chart, Friday printed a strong green candle. It retraced back up towards the starting point of the recent downtrend where lower highs and lower lows began forming. But it's still far from reclaiming the level where PPI-driven dump started. And on top of that, price ran straight into resistance at the uptrend line that's been intact since the 74K low. So just from the Bitcoin chart alone, I think it's still too early to call this a full shift back into an uptrend. But in contrast, the ETH chart tells a different story. It ripped with the massive green candle, taking out the previous high. Looking at the uptrend line that's been intact since June at 2100, ETH never actually broke it. And even during the recent drop, it found support right at the trend line and bounced. Now the price is trading well above it. In other words, the PPI spike and fading rate cut odds only created the appearance of a broken uptrend. The reality is the trend never actually broke. And that was the hint, the signal that the Ethereum chart was already putting out. So that the reality is ETH is the one dragging the entire crypto market by the collar right now. So like it or not, keeping a close eye on the Ethereum chart has become essential. And another key point from a technical perspective on the Ethereum daily chart, we saw a minus 5.5% big red candle, but the very next candle completely engulfed it. A classic bullish engulfing pattern. And from a technical perspective, a bullish engulfing pattern should be treated as bullish signal unless the price breaks below its midpoint. And taking this into account, the next red candle did not break below the midpoint of the bullish engulfing. Instead, it bounced up. And that only reinforces the view that the uptrend was never really broken in the first place. And even in ETF flows, Ethereum is ahead of Bitcoin. Despite Friday's bounce in price, Bitcoin has now seen 6 straight days of net outflows. And meanwhile, Ethereum has posted meaningful net inflows over the last 2 days. So it's fair to say that the ones holding the wheel right now are steering with Ethereum. So here's the final question for today. How do we position? This time, I'm planning to split capital in half and enter long on both Bitcoin and Ethereum. And right now, I see Ethereum uptrend line as highly reliable. So if price pulls back towards that area, I'll be looking to take my first entry there. Whether the price pushes once more before tagging it or heads straight there, no one can know for sure. I can't predict the exact level. If price comes near it quickly next week, I'm looking at the 43 to 4,500 range. I can't know exactly where Bitcoin price will be, but roughly in the 112 to 114K range. And my second entry level would be around the 4,200 area, near the open of the big green candle on Friday and the midpoint of the bullish engulfing candle. And as for the stop loss, with the market this volatile, it has to be adjusted as things play out. But for now, I'm eyeing the breakdown point of that bullish engulfing candle as the level to watch. So I see this as a solid spot to cut if the trend truly flips bearish. But I'm also entering this position knowing there could be some drawdown along the way. And of course, if the market decides not to give me the entry and just keeps running, then so be it. I'll simply wait for the next setup. The real problem is forcing a bad entry and getting trapped. Missing a trade because the level that I was waiting for never came, that isn't that big of a problem. And of course, once I take a position, I'll share it, whether it's through a video or a community post. And honestly, I haven't set up a Telegram group yet since it feels like a little bit of hassle to manage right now. So make sure you've got YouTube notifications turned on. And yeah, that's it for today's video. Thanks for watching. I'll see you in the next one.